Golf course, I think.
Was
I'm
ya?
a bit pink still.
What would be 9 holes?
18.
18? Yeah. What time did you get up? What time did you get up?
We played at 11 on a Sunday.
I thought we went this morning.
No, not today.
Oh, okay. How many shots did you get around then?
101.
So you're about the same as me then. I'll get around like 93 if I'm okay. And then,
this was at the L's. The L's was tough.
Yeah, ours is wide and long.
Yeah.
It's like me. Sorry about that, not on the podcast.
Oh my God.
We're rolling.
We are actually rolling as well.
Oh my God.
Okay, fine. Right, I need the little cheat sheet. Have you sent it to me? Okay. It'll be on email, on it. Just get it for you now. I've got it. Let's have a look. Yeah, I got it.
How visible is my screen if I look at like a couple?
You can look, by the way, don't worry about like looking at things like that. Like I'll just I'm looking at this today, like who gives a fuck. Like that's what we're
I've got the data to hand to back up the conversation.
Exactly.
So
We've got the conversation at hand to back up the conversation.
We'll see. One way to find out.
Okay, I'm ready. We just crack on, do we? Yeah. We don't really say anything. We don't say like welcome to anything. That doesn't happen. Okay, fair enough. Okay, cool. Michael Melim, Head of Mortgage Services. Is that the role?
Yeah, correct.
Is it actually the
For
role?
now.
Yeah? For now, yeah. Until what? Until we bin you off and you're back to Tesco.
Exactly that.
So thank you very much for coming on. Talking about mortgages today. Quite an interesting subject for people trying to enter the property market. I think a lot of people don't maybe know we have a mortgage department, one of the most successful independent mortgage divisions in the UAE.
Yep. Correct.
And you've been brought in to run that from the UK?
Yeah, absolutely. Exciting times.
What did you do before?
So in mortgages for the last 12 years now, back in the UK. Started off in the banking world. So my first role in mortgages was with NatWest Bank in London.
Yeah.
Stayed with NatWest for 5 years.
Is that like NatWest? Is that where Coots is? Is Coots NatWest? Where's that? Or is
NatWest technically owned Coots as a brand. So Coots is known as the Queen's Bank, or historically the Queen's Bank. So ultra high net worth clientele. But yeah, spent some good years there, met some great people along the way, decided that it was time to subsequently move into the broking world around 5 years later. Got a bit fed up of having to recommend one set of products, one set of criteria to my clients.
We hire mortgage brokers, or we did hire mortgage brokers, but if you come from a bank, really you're an order taker. And I don't think that's what a brokerage is. I mean, a broker specific to me is there to solve problems. I mean, one of the guys who is my neighbour at the moment is looking at buying a house in Dubai. Net worth's about £200 million. And subsequently he said, I'm struggling getting a mortgage. And I was laughing, saying, wow, yeah, you've tried to do it the way of going to a bank, and that, you know, how people's irregular income comes in at ultra high net worth is wildly different. I think in the brokerage world, you have to be able to deal with these people and how put the square pegs in the round holes. That's the saying. That does work. How put the square peg. Yeah.
I'm with you.
That's basically what brokerage is about, would you say?
Completely agree. It's all about finding solutions, right?
Yeah.
So people's first port of call will be to go to their main bank. That's who they have a financial relationship with. At the outset of our relationship with our clients, we've never met them before. We don't have the same presence individually as a global bank may have.
Yeah.
So naturally, the first port of call is to have that conversation without effectively understanding how painful the process can be. Where is the guarantee and assurance that your bank's product is best suited to you as a client?
That's wild, by the way. So I think one of the biggest things about dealing with a lender, but this is not a pitch to someone saying, oh, use our mortgage services because you haven't got to use ours or anybody else's. But going directly to a bank, it blows my mind that like people do that because they're going to say, our product's the best, and you see nothing else in the market. Like, why would somebody go direct to the bank? Is it just convenience because they're banking with them?
I think it's that. I think it's the relationship they have.
Yeah.
So, you know, when you open your phone, you've got online banking there. If you see HSBC,
apply now,
and you check your current account balance and it says mortgages here,
yeah.
What's the first button you're going to click when you're looking for a mortgage, right? Yeah. So naturally it entices the client to approach the bank directly.
See, that's me, Mark. I'll be honest with you. I am the man of convenience. Yeah. Like, if I go on to Deliveroo, I don't really look at what the food is. I go to quickest delivery, and then I'll pay whatever it is to get it. And I'm that man that's just like instant gratification. Yeah. And I think a lot of people in today's world are that.
For sure. And I think that it's, I guess, to be successful in this role, we need to have the ability to take ourselves out of our positions and look at it with an open mind. Yeah. And what would the consumer do rather than what's best? Yeah. We know what's best, but how do we educate the client and consumer that what we have is the best solution?
I got a question for you.
Go ahead.
You're not a mortgage broker now.
Okay.
You're back in Tesco's. Okay. You're in the bakery aisle.
Okay.
You're getting a mortgage. Okay. Your choices are, genuine question, you can get a mortgage with a broker is cheaper, okay, and it's more expensive, but it's easy to do, or it's easier and it's more expensive.
Easier or more expensive, did you
Easier
say?
and more expensive.
I would probably, at that time, in my position at Tesco's in the bakery aisle, I'd go for the cheaper solution, even if it is more painful.
See, I think most people, and you're right, if you were in Tesco's, but I think a lot of people in Dubai would take more expensive and easier.
Agree. And I think that it's us portraying the message that we can influence the ease of that product to our clients. I think at the moment what we're not necessarily failing on, I guess, but I think there's a lack of education out there for our clients and what we can actually do and the level of service we can offer, which is something I'm working on internally.
Yeah.
A big duty of my role is to get my team to speak to as many clients as we can to show them what we can actually do.
Yeah, I think it's interesting because a mortgage brokerage, I think if you take Allsopp and Allsopp Mortgage as a business, we're actually the dream setup. Let's say if you were going to start your own mortgage brokerage, having a business that generates 900 to 1,000 new buyers every week, like that is a mortgage broker's dream, isn't it?
100%. Every lead is a warm lead.
Yeah.
They've inquired with us for a reason. They have a motivation to purchase a property, to purchase their first home, the next home, or the next investment property to grow a portfolio.
Yeah.
And ultimately, again, I reiterate that we need to have conversations with all of those clients to really show them what we can do to maximise.
Which we're struggling with, in all honesty. Just speak candidly about Allsopp and Allsopp Mortgage Services. We are struggling at the moment to get through to every customer because there are too many and not enough mortgage brokers.
Precisely. And that's a good problem to have because it shows that we have the opportunity to grow, right?
Yeah. I think most of your business as a mortgage brokerage comes from referrals from the brokers themselves.
Correct.
And I remember me and you having a conversation about 2 weeks ago, and we were speaking about your team specifically and saying how talented they are and how well they're doing, how successful they're doing. But they haven't got time to literally pick up the phone to someone that doesn't know our services as a mortgage brokerage, but is registered with Allsopp and Allsopp.
Yeah.
Is that a big problem you're facing?
Absolutely. And that buyer that we refer to could be the best buyer in the history of the company, right? Who knows? I find that at the moment we're focusing on servicing clients to not only keep the client happy, but keep the brokers that we're working in partnership with happy as well to enhance that lead flow.
Yeah.
But some things have to change when it comes to lead generation because I want to articulate that message to as many of our clients as we can because I know the value we can add to all of our buyers.
Yeah, I think there's so many opportunities when you talk about mortgages. Like historically, let's say since we've been open, I don't even know what it is now, 2008, whatever that is, like 17 years. How many refinance opportunities are there? And to be honest with you, forget as a business, no one has called me. My bank is Commercial Bank of Dubai. I've had my mortgage now for 4 years in my house I'm in. Surely someone should have called me from the bank and be like, hey, by the way, but the bank would never do that, would they?
Not at all.
Because
so they make money from you on the follow-on rate, right? So if you
what's the follow-on rate for anyone listening?
So the way that this works is you'll have an initial incentive period with your bank. So for example, you'll tie into a 3-year fixed rate product, which does what it says on the tin. Your payment won't change for that period.
Yeah.
Upon the expiry of that particular product, you'll roll onto something called the bank's follow-on rate, which is generally a set percentage above the IBOR rates, which for those listening again that are used to the UK and American markets, it's the equivalent to the Bank of England base rates or the Federal Reserve
so
rates
it's basically what the central bank will charge plus the bank's fee on top, the margin, which is their profit in essence.
Exactly that.
And I always say this, people that don't understand mortgages, if you've got a bank that charges, let's call it 3% margin as an example, and I know that's quite heavy to say 3%, but if you do a 20-year mortgage, you have paid 60% of the value of the house in interest payments.
Scary.
It's wild, isn't it?
Scary.
So as an example, you buy a house for 10 million, your mortgage is 10 million. Once you've completed the loan, you've paid 6 million to the bank in interest.
It's just unbelievable. And I think that something that puts people off of mitigating that problem are the fees associated with remortgaging or buying out to another lender in the UAE. Very recently, not so long ago, let's say, the early repayment charges were capped, as you're going to be very aware.
They were 2% at one point, by the way. So just put that into context for you. This is what we used to do. Obviously, this is before you were here. Yeah. You sell a house with someone with a mortgage and they've got a 5 million mortgage example. You have to pay the bank 100 grand.
It's ridiculous.
Now it's capped at 10,000 dirhams.
10,000. So 1% of the mortgage value or 10,000, whichever is less, which is the key point. They could have gone with whichever is more, but they decided to go with whichever is less, which is amazing. And I think that it really opens the door for people to refinance their properties and potentially extract equity to go again. If we use you as an example, Lewis, if you look at the property that you purchased, let's say 4 years ago, express as a percentage how much you feel that property is appreciated by.
You don't want me to say this, do you?
I do.
Probably 200%.
200%. Okay. And you're not going to be the only example of that out there, right?
200% is quite 200%
good. 200% isn't bad, mate. Yeah. So my point is that for those that have experienced between 100 to 200% capital appreciation over the last 4-year period, have they considered buying out, extracting equity to reinvest into the market?
Yeah.
Are there more opportunities where you can do that again in future?
Yeah,
there's some exciting stuff in off-plan.
Yeah, I mean, the off-plan market is just wild, isn't it? I mean, I'm on off-plan WhatsApp group at the moment. We sold 54 units in 2 days. That Gaff Woods just launched. Yep. We had 30 checks for people saying, can you get us front of the queue? Now, off-plan at the moment, our team is insane.
Yep. And
basically, the launch is tomorrow, and we've got everybody in before the launch has happened and selected the units. And we did the same thing with the launch in DIFC. So I think that's where a lot of the market is going. I think people extracting money from properties or investments or rental income and then putting it into something else. I'm probably the perfect example. Like where I'm doing most of my investing at the moment, my properties that are renting, I'm trying to get them a 1 check or 2 checks. Once I extract that money, it either goes into Bitcoin. Like yesterday, my Bitcoin went up 11% or 10%, whatever it was, in my portfolio. And like, I don't want that money sitting there doing nothing. I think a lot of people are probably sitting on cash in their properties.
100%.
They're not doing anything. And now people are putting it, which is fueling the market. I think that's an interesting one. Dubai isn't bringing millionaires. It's doing that. But I think a lot of millionaires were made in Dubai from buying properties.
Yeah, for sure.
Which doesn't exist around the world, by the way.
Not at all. Not at all. It's the prime market to invest in at the moment, in my opinion. I think if you look at the currency fluctuation recently in line with the pound as well, it's a better time than I've ever seen to invest in Dubai personally.
I tell you something, when I moved here, it was 7-1.
There you go.
7-1. So you imagine then every £1 was 7 dirhams. So if you were doing it in 2007 or 8 or 2006, basically you'd probably get double the property you're getting now. What we've seen here, and this is for anybody watching, let's say the interest rate was like 4.2 at one point, 4.2. It's now 4.9, is nearly 5. So really, you're probably getting 30% discount if you're buying your money in sterling and bringing it over.
Absolutely.
Which is wild.
And it's a big enticement to do so, isn't it, at the end of the day? Because when you go back to that 4.2, when the dirham was at its strongest ever peak against the pound, is that the right time to invest in the UAE? For most, probably not. But now we can see it slowly going the other way. Whether it will continue, we'll see. There are a lot of global economics happening right now that will influence that.
Let's talk about that a little bit. Yeah. Trump, what's your stance on the whole Trump thing, like the tariffs?
I just think he's absolutely wild with his strategies.
Yeah. Do you like it?
You can see some method to the madness. Yeah. And something that I always say about Trump is whether you like him or you don't, he always does what he says he's going to do, in my opinion.
Yeah, I agree.
It's very rare that he says something and doesn't go through with it.
Yeah.
The tariff piece is a difficult one to articulate, in my opinion. I think it's going to be hard to implement what he wants to implement, because what he's effectively going for is to reduce imports from external nations going into the US. He wants to keep everything under his remit, right?
Yeah.
And naturally, what that would do is potentially create more jobs in the US, more taxation in the US by way of income tax.
Because he said, didn't he? He wants Apple. He said, Apple, no problem. Come from China, build them in America.
Yeah, exactly that. Exactly that. But I think that by enhancing those tariffs with the likes of China and other global nations, would that then encourage Apple to build more bases in the US and invest more into the US economy? Potentially, who knows?
I think if I was a president, I'd be like Trump. I'm gung-ho.
I think you would
like, I'm 100%. I'm like, yeah, this looks good. Let's go for. I like leaders, and not just in politics, in life, that break stuff and put it back together and figure out. Because let's be honest about it. Talk about it, America as a whole is broken anyway.
Yeah, exactly.
Like it's losing trillions. Like he's obviously looked as a business person, like, right, we need to make this money back. There's a massive deficit. Like, and we can't take it from just the rich. Where you look at Rachel Reeves in the UK, like the whole stance of the UK is if you are wealthy, we're coming after you. And the wealthy have just went, no problem. So I'm going to move all my business and everything to the UAE and my assets. I mean, I told you about my neighbour before. My neighbour is very, very wealthy. And I said, what are you doing here? He says, move my assets here. I'm living here. I like it. It's safe here. But more importantly, like my wealth is protected here. So I think I've seen so many people placing their business here. So I just think politically, politics is always going to have an effect on the real estate market.
Yeah, agreed.
Always.
I think that the effect it could have on mortgages from a Federal Reserve and UAE standpoint is the fact that what Trump's effectively asking for is to, in my opinion, have his cake and eat it, right? So naturally, import costs are going to increase. So if we stick to the US, the likes of Walmart, for example, okay, if they're importing something that historically cost $100, with that 10% tariff that's being added on, it's now going to cost $110, okay? Who is going to face that cost when you look at it?
Customer.
Yeah. Walmart are going to pay it up front, but they're going to then load it onto the customer. Yeah. What does that cause from an inflationary perspective?
Everything more expensive, which means that people are have less spare money. Whether that's milk, food, tech, whatever it is. There is a massive inflation issue.
From an interest rate point of view, naturally it means that interest rates have to effectively remain high to prevent that consumer spending. But what Trump is after is he's after the Fed backing to drop those interest rates to effectively, I guess, free up disposable income for those US citizens to swallow the enhanced cost of the imported goods.
Because it's interesting, isn't it? People think the president and, let's say, the prime minister, I always try and explain to people, my opinion of a president and prime minister is they're just an employee. They're still not the guy that presses the red button to make everything explode. Yeah. They still have to answer. We talk about the interest rates. There is a treasury that have to answer to, that have to give authority. It's not just, Trump can't just go and make the interest rates that. He's basically economically forcing their hand by saying, if you don't do this, I'm doing this. Yeah. Wild game of politics.
And that's the sticking point, isn't it?
Yeah.
Whether you turn left or you turn right, that's the question.
Yeah, it's, I don't know. I mean, look, I'm very transparent about my investments and what I do. I'll always be open about, my pitfalls I face. One of the pitfalls I face, I bought a property in London 6 years ago in Earls Court. My mortgage at the time was about £4,000. I was like, I'll swallow that, no problem. Like $6,000, it's at $4,000. It's not ideal, but I'll swallow it. Anyway, the interest rates went up, and my mortgage went up to like nearly £9,000. I think £8,400. It's like, fuck that.
So, question for you: was that off the back of rolling onto the lender's variable rate, or was that when you tied into a new fixed product? Potentially,
it was once the fixed product had ended and it kicked into the new rates. And what happened? The interest rates had gone up. Yeah. Whilst I was in my fix, so once I come out of my fixed period, basically clicked into the new rates. Yeah. In the end, fortunately, I could do it. I paid my mortgage off because I was like, I'm not spending. If my mortgage was £4,000, I'm not spending £5,000 a month on interest. Like, there's no way I was doing that. Now, for most people, I wouldn't advise them to do that because how my business brain works, my property brain is, I like to invest my way out of debt. So, for 100%. Instance, if my mortgage is $15,000 a month, as an example, I'm thinking I'm going to find a buy-to-let that pays the $15,000. I had two properties simultaneously going up in value. But once I was in the UK side of things, I was like, the interest rate's too high to try and find an investment to cover the interest. So, I think there'll be a lot of people, if the interest rates go up, you could get caught out. And that's why having a mortgage broker, just turning back into where we're at, if a mortgage broker can lock you in for a longer term for a fit, because you might forecast and see something the banks don't see. You might say tariffs might have this knock-on effect, which could do this. Lock it in for 5 years. You can get now lock in.
5 years.
Okay. Yeah. So 5 years ideally give you enough time to see what's going on in the economy. There is a downside to those and they're being locked in.
Absolutely, and I think that it's all down to the client's attitude to risk, right? You have clients that are slightly more risk adverse and some are more risk taking. So if you're in a position where you think that markets are on the downturn, does it make sense to lock in for 5 years? Potentially not, because you're going to be tied into that rate. Rates subsequently come down. You cannot benefit from those reductions. Yeah. You're tied into that 5 years until the end, and that's it. Yeah. Alternatively, clients that want to take a bit of a gamble, they can either go onto a variable or a shorter term product, such as a 1 year, and revisit the market at that time to see what it's doing and potentially consider a buyout. I think that a lot of people in the UAE tend to gamble on capital appreciation. So
understandably,
the way they look at it is, if I tie in my mortgage initially for 1 year, my expectation is that my property is going to go up in value by X amount. At that time, I'm ready to buy out, extract equity to go again, which is another angle that people are considering at this moment in time.
An angle that people are going for internationally in the UK is the HMO model. Yeah. Do you know much about that? Do you follow that?
Absolutely.
Give me a simple understanding, because my understanding of HMO, and tell me if I'm wrong on this, because I don't own any HMOs. Yeah. You buy a property, you might renovate it to, extend it to get extra bedrooms, an example. You rent the asset out as a commercially viable income stream, and you're loaning against the income stream rather than the property value. Is that how it works?
Yeah, so the amount that you can borrow back home in the UK whether it's a HMO, whether it's a standard buy-to-let mortgage, is effectively determined by the rental income achievable.
Okay.
The bank recognises it to be a self-financing investment. So therefore, do they need to dig into your income in too much detail? Probably not, because the purpose of it is for it to fund itself.
Okay.
HMO is effectively known as a roomlet. So if you converted a 4-bed house into a 6-bed property and you rent room by room, that is considered a HMO, which stands for House of Multiple Occupancy.
Yeah.
The problem that we have in the UK at the moment is that some areas are massively overpopulated, and therefore it's more difficult than ever before to obtain the HMO licensing to be able to let the property in that fashion.
Wow, you'd think that if it's overpopulated, they give the roomlets rather than the opposite.
Well, they want to discourage more people coming in, because if they're issuing licenses on new properties, that's going to encourage an influx of even more people coming in. Yeah,
I think one of the things that I've seen is I've got a few friends that do it. I think how I look at HMOs is basically in the UK you can get interest-only mortgages.
Yeah.
And my understanding of HMOs is they will get an interest-only mortgage, and they're looking to do the cash generation of the mortgage versus the interest. So you'll profit off your HMO versus the interest, and they'll use that money, hoping that it maybe it'll go up in value in the next few years. But it seems very popular down the mortgage side of things.
Yeah, absolutely. I mean, to be honest with you, I think it's a very viable angle, particularly considering all of the tax changes in line with being a landlord back home.
Yeah.
They're making it less attractive than ever before.
And my understanding of the tax, by the way, is that before they're taxed on your profit, let's say you made £1,000 profit on mortgages.
Yeah.
Now it's just whatever you receive in rent, irrespective of your irrespective of your repayment. So let's say your repayment is 800, and your mortgage was 800 was your repayment, you received 1,000, 200 was your profit. They charge you on 200. Now they charge you on all the money you receive.
Correct.
It's absolutely wild.
And it makes it less attractive than ever before, because you're paying an additional rate of stamp duty to purchase the property in the first place.
Yeah.
You're being taxed more than ever before when the rental income comes in. And they've reduced the capital gains tax bands as well. So the allowance that you receive when you dispose of the asset is less than ever before, and the rates are higher than ever before. So you tell me where the attraction lies to invest into the rental market in London at the moment.
To me. I've got a couple of properties in the UK at the moment, a couple buy-to-let, one house in London. I have no appetite at all. And I love London. Like in the summer, it's the best place on planet Earth, I think.
Oh, it's fantastic.
But like you asked me to place some money there. So the reason I say that is we were looking at getting a bigger place in the UK a couple of years ago. And for me to get a bigger place, I probably need to spend another £1 million to get in London specifically, because it's so expensive. I just said, I don't see it as a viable investment. Like, forget me living there. Like, why would I put £1 million extra there when I live in Dubai, where if I could put $1 million, I could rent it out, probably get it in one check. They appreciate, I've told you, 200% in 6 years or 5 years, whatever it may be.
Yeah.
It makes it a very solid investment opportunity for a lot of people.
100%. And the way you have to look at that as well is the price per square footage here versus in London as well.
Yeah.
So the top 5 areas in London exceed £1,200 per square foot.
Mine is £1,000 a square foot. So that works out to, let's call it nearly 5,000 dirhams a square foot.
Yep.
Like, you can get most developments in Dubai for 5,000 dirhams a square foot, like really nice developments. Mine is in Earls Court. It's okay. It's a nice area. It's 2 stops from Harrods. But that you could get stabbed. That is where you're at. It's quite exciting.
That is how it is, isn't it? There's no in between.
Yeah,
in my opinion.
It's exciting though, because I sit on my balcony and it'd be like 7 p.m. and I was sitting there with my Marks and Spencer's pick a mix, and I'm sitting there just watching what's going to happen. You don't know what's going to. It's so exciting. It's brilliant.
I think the one at the moment is everyone going past in the electric scooters, snatching phones. That's a good one.
Yeah, but you know what? This is going to come back and bite me in the ass. If you get your phone robbed off you in London and someone's come past with an electric scooter, that's your fault, because you know what's going on. I'm not that thick. Famous last words watching this summer.
Next time he's in London.
I'm going to do a podcast. I got robbed in London.
I want to be there to see it.
Okay, so 2025 outlook. How do you see? How's the mortgage processing looking? How do you see in the economy? How do you see it from a mortgage standpoint?
I think that the mortgage processes here are very much in their infancy in comparison to a prime market like London, if I'm being completely honest. There are some major positives here, and I think one of the big positives here is that any application we key for a client is underwritten at the outset.
Okay, what does that mean?
So before a client's even been to see a property, we will submit a pre-approval application to the bank of choice.
Yeah.
That bank will then complete all checks thoroughly at that time to issue the guarantee of the loan, subject to the property being okay.
And this is in Dubai?
This is in Dubai.
Okay.
So what that means to you is you would have supplied all of your documentation, such as pay slips, bank statements, ID, you name it. somebody would have looked at it before you've even seen a property and put a big green tick in the box. That way, when you go and see the property in question, you can buy with ultimate confidence because you know you can get the money. You know you're comfortable with the monthly outgoing. And for the real estate broker selling that property, they're in a position where they can articulate that offer to the vendor with utmost confidence because they know that buyer is good to go.
Do you know what's surprising though? Is I look at it like from a 360 point of view. I see a lot of people that go and view a house first and they go, I need a mortgage. I've made an offer. It's been accepted. Like, do you think that's just because people have more free cash here that they basically know they're going to get a mortgage? Like, because in the UK, I was trained, if a buyer goes out, I would send them to a mortgage broker. We would get pre-approval. And basically, I wouldn't even view with you unless you have pre-approval. But that's not the case here. I don't see a lot of that. We'd like that, of course.
Yeah, absolutely.
But a lot of buyers are like, no, I can get a mortgage. I want to find a house first.
I think it's all to do with the wealth associated here as well. So I think a lot of the real estate brokers in this building will look at the client and think, right, I'm confident you can afford it. I'm happy to take a punt.
You'd be surprised, mate. We've done a few, mate.
Let's get you out and let's get looking at this property. Whereas what good looks like, in my opinion, is verifying that client finance. So not just from the sales broker's perspective, but from the client's perspective. How much more likely are you to generate an offer from that client if they know how much they can borrow and how much it's going to cost?
Because in the day, if you're a broker, forget that, a real estate broker, and you and my client are like, Michael, mate, stop messing around. I know you got 7 million pre-approval. You offer 5 million. You're tight ass. Get you
exactly that.
You know enough information. I think a mortgage broker's job is to enable both parties, the broker and the buyer, to confidently make a decision. And if you don't have that visibility, I don't know how you can make them decisions.
And for me, it's not just confidence, it's time as well. So, for example, if you're taking a client that you think may be able to afford that property to the property, they might not be able to. So effectively, you're just satisfying their curiosity.
But to take you on a bus tour, come on, open top.
Exactly.
Bus, let's go and have a look at Dubai and see how you're getting on.
Precisely.
I'd love to know how much petrol we've wasted in our careers doing that. It would be wild. People that you view with and just ghost you, and basically they're no longer there. Okay, so one of the big pain points that I see if we talk about mortgages is what blows my mind. Let's say, for instance, you want to pay someone's mortgage off. 7 to 10 days for a liability letter from another bank.
Scary.
Why do they do that? Why do you think they do that?
Would it be a misinterpretation for me to think that it can be dragged out to accumulate additional interest being added to the loan?
That's exactly what I think it is. You would hope. I spoke to the top guys at the Dubai Land Department, Ria and everybody else, and I explained to people, we're trying to build this market of speed, fast-paced convenience. And it absolutely blows my mind that we go to discharge a mortgage, which is all electronic. On WeO now, I can send money to a fixed deposit, buy a Bitcoin, transfer everything in 1 second. Supposedly, Starling is coming to Dubai.
Okay.
And they have just announced in the UK that you can do mortgage pre-approval in like 3 minutes. So they must see your information online. What's slowing this market up? Like, the biggest problem we have in this business, and this leads on to it, is we're putting more deals in the front end, but we can't get them at the back end quick enough. So we're agreeing the sale, we're getting the checks all done, but how slow it is to get a liability letter. And then I'm not going to talk about the NOC for the developers or things like this. It's these archaic methods. Do you think they're going to end one day or soon?
I think that the positive I'm seeing at the moment is when I'm speaking with these banks and relationship managers, they are looking to enhance their workforce. And I think that at the moment they're focused on balancing the books and taking as much profit as physically possible. I think that in line with market demand, they have to increase their work balance. So at the moment, they don't have the capacity to cope with the number of applications they're processing.
I think it's a tech issue, Michael, to be honest with you. I honestly think not enough banks invest in technology to speed up the process.
However, when we go back to that manual process that we follow currently of applications being underwritten up front, what's a better system, in my opinion? The UK system where you get the agreement in principle after a soft credit search and something's in front of you saying what you can borrow within 30 seconds with no human intervention? Or actually, do we prefer the fact that a human picks up the case, signs off the documentation, guarantees that funding for the buyer? So I'm on the fence with it because
I think it will go the way of having all the human checkpoints, like the funnel, like have they done that? Have they done that? If all these points click, automating it. I just think that the quicker you can get, there is no reason in 5 years you can't have a finance to finance deal and it be completed in 3 to 5 working days. There's no reason, because the fund transfer and execution of liability should happen very quick, but it doesn't. So I think that's probably the biggest the biggest pain point I see. And expectations for 2025, everybody finishing this off now for mortgage rates. Where do you see them going? And what are they at the moment?
I think it's very early to tell because I think that global economics will have a massive influence.
Yeah.
At the moment, IBOR is at around 4.33%.
Yeah.
We're, of course, directly pegged to the Fed, which is in a bit of turmoil at the moment in line with Trump's changes. I think that we're going to be relatively stable for the next 3 to 6 months, in my opinion, with potentially a cut at that time.
Yeah.
Initially, the markets were predicting 3 cuts this year.
Oh, wow.
I think that we're going to struggle to see that in line with the measures that are being imposed.
Yeah. Okay. Very good. Well, look, if you're looking to get a mortgage in Dubai, my tip is, yes, speak to your bank, but a lender will go and speak to, how many banks we signed up with now? 20?
Around 12 at the moment.
12? I've tell everyone we've got 25 banks. I'm sure. So we've got 12 banks we're working with, some of the best banks in Dubai. Our job is to take your documents, go to each lender on your behalf and make sure that you are getting the best rate, best execution on staggering future interest payments and making sure that things like, now I'm sure you can get evaluations free if you're negotiating your terms.
Absolutely.
So there's a lot of add-ons you can get from a mortgage broker. So do speak to Michael, speak to the mortgage team, and thank you very much, guys.
Thank
Cheers.
you.
Bye.